Have you ever wondered, how does the Reserve Bank of Australia make its decisions about whether to increase rates or decrease rates, and how much to increase rates? Well, if so, I hope to demystify all of that in this episode. Hi, my name's Nero from Investment Rise, and right now you could be forgiven for being totally confused on what the Reserve Bank of Australia is doing. I mean, globally we're seeing central banks increase interest rates steeply, and yet our Reserve Bank seems to be slowing down. I mean, check this out. Fed approves 0.75 point hike to take rates to highest since 2008. Or this, Bank of England raises its benchmark rate by 75 basis points, its biggest hike in 33 years. So then why is our Reserve Bank only increasing interest rates by 0.25%? Well, let me aim to answer that question by this simple checkbox system that I have here. Okay, so on the top I have whether the Reserve Bank of Australia should increase interest rates, keep them neutral, or decrease. And then on the left-hand side, I've got the various elements that the Reserve Bank should consider. All right. Now, this model was first inspired by economist Stephen Koukoulas, a very smart guy. He's well worth following online. All right. And so if we look at the different elements that the Reserve Bank has to consider, element number one is GDP, or gross domestic product. Okay. How fast is that growing? Now, Treasury, Reserve Bank of Australia would like to sort of keep it at growth at anywhere from 3 to 3.5%. All right. Right now, GDP growth is nearly 4%. And why is GDP growth so strong? Well, let's have a look at this chart here from the Reserve Bank of Australia, which shows the contributions to GDP growth. And as you can see, it's been updated to the 27th of October 2022. And what you can see here, the biggest element driving GDP is consumption. In other words, it's consumers spending money, okay? It's retail spending, it's all of that. And while we continue to spend money, okay, GDP growth is going to be high, all right? And so that's why the Reserve Bank of Australia is concerned about how fast GDP growth is and is trying to slow it down. Because if you look at the other elements here, dwelling investment, mining investment, they're both slightly negative. Non-mining investment is slightly in the positive. Government spending is the second biggest element of GDP growth. Exports is there as well, but then imports is significantly down as well. Okay, so GDP growth, why is it so strong? Fundamentally, it's because we're spending. And so then if you look at this next chart here, which talks about GDP growth, what you can see here is this blue line here. Okay, it's sitting now towards the end of 2022 at nearly 4%. However, it has come down from where it was just a little while ago, okay, sitting at nearly 9%, okay? So it shows that as strong as GDP growth is, it's coming down, which is what the Reserve Bank of Australia is taking into consideration when looking at whether to increase rates and how much. Okay, so because it's higher than the upper limit of the band that the Reserve Bank would like to see, then GDP growth would suggest that interest rates need to be increased. Okay, so that's a tick in the interest rate hiking column next to GDP. Inflation, no brainer. Okay, that's definitely a tick there. Okay, currently sitting at 7%, and the Reserve Bank wants to see it somewhere between 2 and 3%. Okay, so it's more than double the upper limit of the desired bandwidth. So therefore, that would go as a tick in the rate hiking column. Element number 3 is the labour market. Now, the labour market's an interesting one because it's often the last element to move in a rate hiking cycle. Okay, and so right now the labour market, it sort of comprises of unemployment rates or employment rates, whichever way you want to look at it, wages growth, okay? And right now, unemployment is sitting at about 3.5%. It sort of dropped to 3.4, then bounced up to 3.5, and it's sort of sitting around there, okay? So that shows that it's not really getting any better, okay? It's not getting any worse either. And also the fact that wage growth isn't really exploding out of control like it has in many other economies. So if you just look at the labor market, and if the labor market was the only criteria that the Reserve Bank of Australia had to base interest rate movements on, it would probably say steady for now. I don't think they'd want to decrease it because unemployment isn't getting worse, right? As I said, it's just staying roughly the same. So interest rates will stay neutral on that front, okay? Then the fourth element here is commodities prices. In Australia, we are a huge exporter of commodities, right? So stuff like gas, coal, copper, lithium, and then other stuff like wheat, wool, beef, all of that. So if you look at the commodities price index, which effectively measures just how much money our export companies make, well, consider this: oil prices are declining, timber prices are declining, which, mind you, is a important part of housing construction, okay? Copper prices are decreasing, okay? Agricultural product prices are decreasing. So if you were to just look at commodities price index, you'd probably think that, oh my goodness, in 2023, Australia's going to be in for a tough year because all the export companies are going to struggle because commodities prices are falling so much. So therefore, if the Reserve Bank only considered commodities as its primary indicator for interest rate movements, it would then say, well, based on that, we'd actually have to decrease interest rates, okay? So that's based on the commodities price index. Then we look at house prices, okay? Everyone's favorite thing if you're here with me right now, okay? And we know that on a national basis, the median house price is declining, okay? Now, the other thing in Australia, which is quite unique to Australia versus many other parts around the world, is that when our house prices fall, Australians tend to spend less. Put it differently, if our house prices are not increasing, if homeowners don't feel like they're becoming wealthier because their home prices are increasing, then we Australians tend to spend less, okay? And if we spend less, then that's less money going around the economy, and that has a contractionary effect. So therefore, based on house prices, okay, house prices alone, you would then say, okay, well, then the RBA would look to decrease interest rates, okay? If that was the only element, okay, to consider. And then the final thing to consider here in this checkbox is what's happening overseas, internationally, right? As I said earlier on, we know that the US Federal Reserve is increasing interest rates. We know that in the UK, they're increasing interest rates, okay? And so all these global economies are hiking rates, but their economies are contracting, okay? And so if we understand what's going on from an international perspective and say, okay, well, if all those economies are contracting, okay, then it looks like, and especially with, say, the US especially, is on the edge and teetering on going into a full-blown recession. Some people tell you the US economy already is, but based on what's happening overseas, then the Reserve Bank would look to decrease interest rates, okay? So now if we stand back and look at this and go, well, hold on, based on these 6 elements, we actually have 3 ticks here in the decrease interest rate column, only 2 here in the increase interest rate column. Right now, of course, these 2 are probably the biggest from a weighting perspective, okay, in terms of how the RBA makes its decisions. But this is one of the reasons why I'm strongly of the opinion, and this is just my opinion, this is not advice whatsoever, but in my opinion, I really believe that the Reserve Bank of Australia is getting close to the top of its rate hiking cycle, okay? Now, of course, if these data points move, okay, if something was to change, and if all of a sudden the US and UK economy started to growing again, or the labor market started to all of a sudden get even stronger and unemployment rates fell, then of course this would change, okay? But based on the data right now, in my opinion, I expect that we're getting pretty close to the peak of interest rate movements, and that in 2023 we're going to see the rate stay flat and then even the second half start to fall, okay? And the reason why I'm saying that is because now that we know how the Reserve Bank makes its decisions, let's have a look at what the Reserve Bank is actually trying to do. So here we have a very simplified model of what the Reserve Bank of Australia is trying to do, and essentially what I would think almost any central bank is trying to do, okay? So we have on the left-hand side, we have an inflation crisis, which is currently happening around the world, okay? So that means prices are rising and it hurts people's buying power, okay? So $10, it doesn't go as far anymore. And this has a bigger impact on people on lower incomes, okay? But then on the other side, we have risk of a recession, okay? And if we have a recession, there are job losses, people stop spending money, okay? So the Reserve Bank is trying to thread this very tight little needle between the two, okay? And if they were to get it wrong, this is what they would prefer to do. They will be happy to thread this needle, but if they get it wrong, they'd much rather head over to this way and create a small, sharp recession rather than blowing out in inflation, okay? And this is one of the reasons why they went so hard, so fast early on with so many rate rises, each of 0.5%, okay? But now they're starting to slow it down, okay? Because they don't want Australia to go into a recession, all right? And when you now know all the different components that the Reserve Bank of Australia has to consider, hopefully that gives you some sense of what the Reserve Bank is trying to do and why I'm so confident that the rate hiking cycle is coming to an end, and then 2023, I think especially in the second half, all other things staying the same, odds are we're going to see some rates starting to fall. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income,